Hi, hello everyone. Welcome to the Hangout, and let's get started. And as always, the disclaimer at the beginning saying that I'm not an attorney, CPA, or financial advisors. I'm not trying to provide any financial advices, and it's just the pure. This is purely for financial education, and it's my opinion. And so let's take care of that, and let's get going. So in this module, what we are going to talk about the first key components in investing, the assets, as we ran through it in the last module when we talk about the four key components, right? As a reminder, it's assets, structure, finance, and people. So in this module, we'll focus on assets and using real estate investing as an example. So real estate investing is pretty obvious what the asset is, which is the property itself, right? So when we do real estate investing, what should we learn? What should we focus or know about regarding the asset? I have been studying and learning and practicing real estate investment for a couple of years, and it took me, a couple of years of continuous learning or continuous education, and actually doing the work. So it is a huge topic to go through, and it is definitely not possible to finish it or to go over every single detail within a 20-minute module. But to remember, what I'm trying to do here is to help you to raise your awareness. What are the things that you should be focused on, or you should know about, you should look at when you're doing real estate investing? So in the asset, first things first is real estate investing is a huge field. There are many types of real estate investing and real estate properties. And there are people typically you organize it under either is a residential real estate or commercial real estate. They have different properties, and depends on which type, the fundamentals and the market that you need to look at could be slightly different. So what I'm going to show you later on in the fundamental and market session is the overview of everything that basic common or the key points that you will learn about in all this residential commercials real estate. So in residentials, there are typically four types of residential real estate. Namely, just we should all know about it. Just a single family, townhouse, condo, and then it depends on the location. Duplex and triplex are typically considered also as residentials. In some place, quadplex, which means that you have one properties that have 4 units in it, is also considered as residentials, but depend on the place. For example, if I remember correctly, in California, fourplex is considered as commercials already. So for different residentials, they have different characteristics in terms of course, desirabilities and also the market cycle. For example, like when we will go over real estate cycle later on, but for condo, the real estate cycle will typically ahead of the single family, or saying when the price start to drop, the condo market will start to drop before the single family. And then when the price start to rise, the condo is also the last to rise. The idea is obvious back then. is because the desirability of a condo is typically less than single family. But of course, things changing a little bit around nowadays because people's living, are getting more used to living in condos or living in apartments, and so things is dynamic. So when you're doing investing in real estate, you need to know about the real estate market, which I will go through it later on. So besides residentials, the real estate investing also has commercial real estate, and there are many types of categorized under commercials, like multi-unit. Oh, sorry. Actually, let me zoom in a little bit because I think this is a little bit harder for you to read. So there you go. So in commercials, there are a lot of different subtypes, right? And they all have different characteristics. Multi-units, meaning fourplex or plus, typically. But most of the time you see is fourplex. And then apartments and apartments is also have actually three subcategories from 8 to 12 units to and then from 12 units to 20 units, and then 20 units plus to 50 and then 50 plus. They're large apartment complex, then their characteristics could be quite different. And besides apartment, of course, office space. If you work in a company, the company space you work in is office space, and they of course have their own supply and demand and so on. And then the others would be a little bit more similar. The retail mixed use, meaning is either retail plus office, or retail plus apartment, or office plus apartment. Basically, is a mixing of typically two. I haven't really seen more than two types of commercial real estate. And of course, and also mixed use, also including residential. You can have an office and then residential. Residentials are like warehouse, and when you go to say do real estate investment, you go to buy go to contractors, and then they bring you to the tiles company, and those are typically in a warehouse style settings, and those would consider as residentials. And of course, things like the huge warehouse for doing concrete, and those would also consider residentials, and like say auto repair shop, that kind of thing. And besides residential, you could also invest in land, raw land. And basically, raw land, typically people buy it for holding, for land banking, what people call it, because it holds the value pretty well. And besides lending, then there's another type, which is development itself, meaning you buy a land, or you have existing building on it, you tear it down and develop upon it. You build single units, or you build apartments, or you build anything, any of the above, right? And when you talk about big development project, the characteristics is also different. And the last one more thing that I can include is self-storage. This is kind of a hybrid between a residential investing and business, because when you think about self-storage, it's basically a warehouse style settings, and then you have a company and doing self-storage. But of course, the warehouse has to be built and set up in certain way to enable the self-storage business. You have to size it. You need to create boxes so that each unit people would rent to store their own stuff. So there are a lot other types, and actually I should definitely add this one, green demolition. And this is one of the things that in Unix Ventures, some of the deal that we're doing is doing green demolitions. Basically, it is looking for some pretty old building, and the building itself, it doesn't worth much because it's so old that it's defunct, it's not functional anymore. But because back then people use really good stuff in it in when they construct it. So there are a lot of materials that you can recycle, the steel beams and the copper and all those things that you can salvage when you tear it down, and you can make money that way. So that's some of the deal that we do is green demolition like this, and also get, also it's kind of like a self-storage, is kind of a real estate investment plus a business kind of investing. So those are all the types, and as you can see, since there are so many different types, it really take you shouldn't really saying learning everything, right? Because you just don't have time, and you should be focused on something. If you're thinking about doing real estate investment, right, you should start with something. And how do you start? I will go over that in the future in other modules, but just focus. Just remember this, that you cannot really become just expect yourself to become an expert in all of the asset types, or all of the property types in real estate investing. You should pick and choose some of it, of one or two or a couple of it, and focus on it and master in it. Then, because then you just make money out of it. Well, after you make money, if you want to expand, then yes, that's fine. But at the beginning, don't think about, you just go all over the place and try to do everything. Okay, so with all types, let's go over here a little bit. So when you talk about the fundamentals, and there are several things. There are several things that when you should look at when you look at a property. Say, taking, for example, taking a single family as example, the physical aspect of it. What's the location? Where does it sit? Because real estate, as it is a real estate property, it can move, it can go anywhere. So the location is definitely a huge part. And as you know, when you hear about real estate investing, people always say location, 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 which is true, right? Because the location dictates a lot about the value of the property. Think about typical 3-2 single family in Bay Area in California versus the same 3-2 single family in Cleveland. This 3-2 in California in Bay Area, say Palo Alto, it could cost you $2 million, while in Cleveland it could be like 40, 50,000. So the location is definitely huge. And then in the location, there are other things that you need to consider, like say just HOA. This is a pretty minor point, but I think about it, so I added it in here. But besides the location, you definitely, of course, look at the condition of the property, what kind of, what's its class, and the BOMA, I forgot what's the actually, is an acronym. You can Google it. BOMA is basically a classification of property, and is more applied to commercial properties. It's basically classified into A, B, C, D class, and it's strictly based on its age. So when your realtor talk to you saying a property is ABCD class, they may or may not refer to the BOMA standard. This is a standard, but when you talk to a realtor, they might say it, use the term, but they might not actually know what they're talking about. So definitely that's one of the things, one of the things that you learn is, when you talk to the realtor, you say, oh, this is a B class property, this is a C class property, this is A class property. And you should ask them, what do you mean? Do you mean is according to the Bowman standard, or what's your definition of ABC class or D class? Because you would be pretty amazed that different realtor will give you different answers. So besides that, of course, if the property is not in good shape, then it needs to be repaired and bring up to date, and there would be a rehab cost associated with it. So then let's move on. Besides the physical aspect of it, there are a lot of things inside, but to keep our module short, within 20 minutes, we'll keep it like that. And probably for this module, we will split in 2 parts because there are so many things to go over. So the next things I'm going to talk about is on the finance. So remember, we were saying the 4 key components in any investing is asset, structure, finance, and people. And this finance is not the same as the 3rd key component. It is related, but what this is talk about is the existing finance that inherit inside the asset. Say, for example, you're buying a property. The owner might have a mortgage on it, right? So there's a debt on it. And of course, you need to consider that as one of your consideration, because say, for example, the property worth $200,000, and you look at it, you want to buy it, or you go to foreclosures, you want to buy it, and later on you find out, luckily, before you close, you find out it's actually on the bank money and it owes $400,000. And if you just buy it as $3,000, you inherit the $400,000 debt, and so you're immediately underwater because, yeah, you just and that just won't happen. And you will lose a lot of money if you're doing, say, for example, as I mentioned, foreclosures. So besides that, if it is a commercial properties, it is, say, for example, it's an apartment or an office, then you might have lease and contracts, right? You have tenants in there, and how much are they paying? What's the rent? Are the rent on par with the market rent? And depends on the location, where the property sits. Do you have problem replacing the lease or bring the lease up to date to the current market rent? There might be cases that you won't able to do that. So those are the finance that things that you need to look into when you invest in property. Okay, and with those, of course, there are, and the finance you need to look at is current account statement. In the account statement, what's their gross operating? I should put this up there. What's the gross operating income? How much they're making, and what's the operating expense, and how much they're spending on fixing the stuff and maintaining and paying the utilities and all those things, and what's their net operating income. Net operating income is basically the gross operating income minus the operating expense, and you get the net operating income. And with that, what's the value? Well, I should ask Ed, what's the current value? Sorry, I was a little bit tired of my tongue got stuck a little bit today. So what's the current value of the property? And then when you divide the operating income by the value, you get a cap rate. That's the short hand for capitalization rate, and the cap rate could be 3%, 5%, or up to 10%, depends on the location. Or, well, in this case, we're talking about a property. And that's basically saying how much money you are making, or the property is making. And the another things you should look at is the debt service. What kind, how much debt is on that property, and how much monthly payment you need to pay, or what's the PI that you need to pay. Sorry, let's say again, what's the PI that the asset need to pay. And you didn't definitely need to know about all that before you saying, you use it to determine is it a good deal or not. It is an asset that you should get into or consider buying or not. So as you can see, we just go through the types and the physical and the finance, and we already at 21 minutes, and we have 4 more to go, and also the market. So I will stop here today, and then we will continue in the next module. Okay, so as always, if you have any questions, you can email me, and or just add your comments in the session below, and I would help to answer your questions or address them in the next module. Okay, and see you next time.